Good afternoon. So this is the second time that I'm gonna try to make this video. The first time I found out that my PC isn't able to handle the length of the video that I was recording. Very sad, but that's how it goes. Today I'm gonna talk about AbraSilver. It's a company I own in my portfolio, and I am going to talk about why I own it, why I think it's an interesting value proposition. As of today, it's 15/10/2025. Just know that all the info that I'm going to talk about with changes in the company, it can mean that the investment thesis changes over time. So just know that what I'm saying today is what I mean today. I'm going to talk about a couple topics. I'm going to talk about the management of the company, about the projects that they have right now, about their capital structure, about their balance sheet, and what my opinion is of the company. So, first and foremost, the management of this company. I do look at the management of a mining company and an exploration company first, because I want to see what kind of people I get involved with and what kind of experience that they have. And as you see, these are the three main guys that run AbraSilver. It's John, Carlos, and David. John, the CEO, has been the CEO since 2019. He has 20 years of background in the gold, silver, and other mineral exploration and development. But mostly his background is in mergers and acquisitions. He has sold a company, Rico Metals, to Centaura Gold for 310 million, and he has held past roles with Lundin Mining and Barrick Gold. Both Lundin Mining and Barrick Gold, now known as just Barrick, since they dropped the gold from their name. They're both really big players in the gold and silver and in the general mining market. So that's good to see that he has some past roles there and that he knows a couple people from these companies. The chief geologist, David O'Connor, he has 40 years of experience in geology, but especially in Chile and South America. And since AbraSilver holds its properties and projects in Argentina, and for those who don't know, Argentina is right next to Chile, it is very good that the geologist on their team has experience in the area because, of course, we're talking about geology, we're talking about earth, we're talking about the ground that we stand on, and the ground will be different in Chile than it is in Antarctica, than it is in the mainland of Europe, than it is in China, for instance. So that this geologist has a firm and long-lasting experience base around the area where they are finding this deposit right now is a very good sign. The geologist also has a couple companies that he founded and co-founded over the years. A couple of them have merged, but one, interestingly enough, has become an actual mine, or well, they're developing it to become a mine. It's the El Espino deposit in Chile. It's an open pitable mine. It's a low grade copper and gold deposit, and they recently raised almost 400 million Canadian dollars to develop the project. The chief financial officer of this company has 25 years of experience in private and public companies. He has mainly been focused on corporate finance, turnaround, mergers, and acquisitions. So, with all of these gentlemen right here, we can see that there's a common theme. It's a merger and an acquisition. So keep that in mind. The board of directors, you can see a lot of names. A lot of people are involved with this company. They have a board of directors. It's 8 people, all within very big firms and names. You can see Lundin Mining, Wheaton Precious Metals. You can see a couple firms that concern mostly in the capital markets. I like that. It's a very diverse, very big board of directors. The CEO is not on the board of directors. That is also good for you and me because that means that the board of directors actually can say something up against the CEO. And it is good to have those kinds of checks and balances. Um, Again, we see connections to major mining companies. You see two people who are formerly from Lundin Mining. And if you look up these people, their backgrounds, you can see that all of them have extremely big and extremely successful backgrounds in the mining industry. So, onto the project itself. AbraSilver has two projects. Their main project, the Oculto deposit in Diablos, and the La Copita in San Juan, also in Argentina. Both of these are in Argentina. Their main project, the Oculto deposit, has a pre-feasibility study, which I will not go over right now because I simply think that my computer cannot handle opening another opening another document. I'm working on getting a new PC so that these presentations will be smoother in the future. But they have a pre-feasibility study done, so it's a pretty advanced project. They know that it's an economic deposit, and they have an updated mineral resource estimate as of July 2025. They own 100% of the project, and for the geology nerds out there, it's a high sulfate epithermal gold and silver deposit. I'm not gonna go in what that about what that means and if that's interesting. Just stating it there. The second project is a joint venture between AbraSilver and Teck Resources. Teck is another very big mining company. They mine everything. And the deal that they have is that Teck can own up to 80% interest in the project if they spend the money and the resources to conduct a pre-feasibility study. So that's a kind of deal where if Teck finds the project interesting enough, they put a lot more money into it, and then at the end of the day, you either know whether or not you have a feasible mine, and if they do, AbraSilver will own 20% of that, which is good. It's a no cash cost for AbraSilver, and that project just moves along very slowly. The last news that came out about this project is in April of 2025, and they drilled 400 meters of half a gram. Half a gram. No, sorry, they drilled 400 meters of 0.5% of copper, and I expect that a lot more drill holes will be put into this project, but it's just a little bonus. Honestly, it's just a little extra for AbraSilver because the main piece, the main pie is the Oculto deposit. So if we're talking about the main piece here, it is the Oculto deposit. It is in the Salta province of Argentina, which is close to the border with Chile and Bolivia. Nearby, there is a producing mine of Fortuna Mining, which mines about 100,000 ounces of gold a year at a cost of about $1,700 an ounce. I think that's very interesting, and I think that's notable because that says that the region that this project is located in is mining friendly. There is a producing mine, there is access to roads, town, people, water, and electricity, and a mine of about the same size. Because I'm not going to be able to show it in this presentation, but if you read through the pre-feasibility study, you can see that they are projecting to have a mine which is about 100 ounces a year, 100,000 ounces, sorry, a year. So we can take this as like a blueprint for the Oculto deposit. Also nearby, there is the Teca Teca deposit by First Quantum. It is a big copper deposit, copper gold, which I also think is notable because currently the deposit does not contain any copper. And since there is a copper deposit nearby, I am wondering whether or not they will find some copper in the future, which can, of course, increase the economics of this project. Um, if we look at the project, there's a lot of pictures right here. Might be a little overwhelming, but if we look at the top, at the middle, you can see the deposit that they have, the Oculto deposit. The dotted lines is the outline of the deposit. And what I want you to understand about this picture is that they have a pretty clear view about how they see this deposit. They have an outline pit that they are ready to go and mine if they decide to go and build this. But around the pit that they have already discovered, there's a lot of extra targets that also are very interesting. You see all these circles, the Sombra, Oculto East, Oculto Northeast, Fantasma, Alpaca. You know, there's a lot of zones that they want to test, and every time they put out a news release, you can see that in the bottom images, they show that they hit gold and silver outside of their current mine pit. So what that shows is that they currently have a deposit. They are putting more money into the deposit. They are drilling more holes, and every time they do, they find more and more gold and silver, and the deposit grows bigger and bigger and bigger. I like that. That's a good sight to see, in my opinion. And what that has done over the years is the following. In this image, you can see the black lines. I think it's clearly visible. You can see the black lines that were going around the pit. Those that were the pit designs made in 2023, and the white lines that you see, the bigger lines, is the pit design that is designed right now, which means that over the last couple of years they've drilled more, and that meant that the deposit has gotten bigger. So that's money well spent by this company. I'm going to talk about the deposit right now and how big it is and what I think it's valued. If you want to check these numbers, please check out the links in the description of this video. I will put links to all the information that I used to compile this information and this presentation. I will put it right there. If you think this is useful, like it, comment, do those things, because that will help my channel out. Maybe I can get a new computer once things start moving. Right now, they have a deposit containing two resources, gold and silver. They have a difference in the measured, indicated, and inferred ounces. A lot of their ounces are in the measured and indicated category. That means that these are ounces that are created by computer models. And inferred ounces, you can take those to the bank and lend money against. They don't have a lot of those. So in later stages of this project, they will have to spend a lot of money to transfer the ounces from the measured and the indicated categories to the inferred category. We're not going to talk about that at all. You can forget all about that. It's just something to keep in the back of your mind. If we add these ounces up, you can see that they have a total estimated ounces of 1.9 million ounces of gold and 212 million ounces of silver. That's the deposit size right now. Oh, well, that's the potential deposit size right now if you assume that the measured and indicated ounces are all there and are all mineable, which I do assume. If we put those numbers in here and we add the commodity price of gold and silver as of today, that's 4,253 bucks. You can see that the maximum value of this deposit right now is $19.4 billion. And the only way to get this maximum value out of this deposit is by standing on the dirt that um, AbraSilver owns and waving a wand and magically summoning all the gold and silver out of the ground. You get all of those ounces at once and you sell them today for 4,200 for the gold and for 53 for the silver. You get 19.4 billion. Of course, that is not a realistic thing. And it's also not something that I expect anybody would pay for a deposit this size. But in previous bull markets and in previous bear markets, deposits have sold to other companies. And usually they sell between a range. There's not a set price for deposits. It's a negotiating thing. People negotiate prices, of course. And the average price of all the sold deposits over the last, let's say, about 20 years has been 15%. That is including bull markets where deposits sold for an extremely high amount of money, and that includes bear markets where deposits sold for an extremely low amount of money. I use 15% as as a way to value these companies. This is just the assumptions that I use, and this is just the way that I look at these companies and decide whether or not I want to buy them. So if we look at a buyout value of 15%, that would value the deposit that AbraSilver has at $2.9 billion right now. That does not include potential increases in the deposit, and that does not include potential increases in the price of gold. Because if the price of gold goes up, of course, the value of this deposit goes up as well. At the moment, AbraSilver has 150 million shares just about outstanding. They have a couple options, and the fully diluted share count is 175 million at a share price of 4.37, gives them a market cap of $740 million. So just to recap, I think the value of this company based on the resource that they have right now is 2.9 billion, and you can buy this company in the open market for 740 million. The top investors in this company are the government of Argentina, the Central Peru. Eric Sprott is the second largest at 8%. Kinross Gold, another big mining company, 4%, and management and the board of directors have 3%, which leaves 75% of the stock in hands of retail investors. I don't like that too much. I don't like that the management and the board only have 3% of the company. That means that they will not negatively feel the negative consequences of choices that they made in their own wallet, which can mean that they, eventually get less aligned with the shareholders because they themselves are not a big shareholder of the company. As of 30 July 2025, the company has a cash balance of 27.8 million, and they have liabilities of 4 million. This is the last statement that the last financial statement that they gave. I expect another statement to come pretty soon, since the third quarter is already done, and then we'll see how much cash that they have left. Over the 3 months ending on 30/6/2025, they have spent 3 million in general and administrative activities. 360,000 of that was in salaries, 1 million of that in professional fees, another 1 million in share-based compensation, and 700,000 in office and administration. They have also spent 9.3 million in exploration expenses, giving them a net loss for the period of $12.5 million. They have issued 12 million shares of stock to pay for these expenses and to keep their cash pile up, diluting the shareholder 7.6% over the 3 months ending in 30/6/2025. They have an exploration to general and administration expense ratio. So that is how much of the money that they raise do they actually spend on exploration, and how much of the money that they raise do they spend on salaries and share-based compensations. They have a ratio of 25%. I like that a lot. That means that most of the money that this company raises actually goes into the ground and actually tries to build a bigger deposit. That is a good ratio. If this ratio is above 50%, you do have to ask a lot of questions to the management about what they're doing and what their goals are with the company, because a lot of these companies are lifestyle companies for the management. They did spend 12.5 million. That implies that if they do this every month, that implies that they are going to spend 50 million bucks a year just to run the company and to grow the deposit. That means that they have to issue shares for that amount of money, and that means that the implied yearly dilution rate, if you hold this stock for a year, is 30%. So every year that you hold this stock, your downside will decrease by 30%. Just keep that in mind when deciding to get into this sector and whether to buy these stocks or not. So in my opinion, there's a big gap between the value that I think that this company has and that the market is giving it right now. What I value this deposit at is about $2.9 billion. At the moment, you can buy this in the open market for $750 million. The deposit is growing in size because the management is diligently spending their money. I think they're spending it pretty wisely. They spend most of the money that they raise on exploration expenses. They spend little money on salaries and on general administration expenses. The management is connected to big mines, and with the management's specific past experiences in mergers and acquisitions, I do believe that AbraSilver will be sold in the future to a big mine instead of them building it themselves. And that's why I think that this valuation difference between the 2.9 billion potential value and the 750 million market cap will get closed eventually. And that means that the stock from this point might be able to rise 400%, given that the gold price and the silver price stay where they are right now and the deposit doesn't grow even further. However, they do have an estimated 15 million in cash left because the last report that they gave us was a couple months ago, and they do have expenses and they do have exploration that they have to do. So there is a potential for a capital raise pretty soon. The stock has also moved up aggressively the last couple months, which of course will give management a better opportunity to raise cash. So I do expect a capital raise pretty soon. With that, the market cap will increase, and the stock will probably fall afterwards, which is a dichotomy, the market cap increasing and the stock price falling. I will get into that in a later video. That is not for now. I do like that they have a low expense rate. Like as I said, they 20%, 25% of the money that they raise goes into G&A, 75% of it goes into the ground, but they have a low insider ownership and a large retail ownership, making the stock very volatile to changes in sentiment of the gold and silver market. Do with this information what you please. If you want to check my numbers and if you want to do a deep dive into the statistics of this company and the reports that they brought out, in the description of this video are all the links that you need to their pre-feasibility study, their financial statement, and to their mineral resource estimate. And with that, I would like to thank you for watching this video. Follow me on Twitter, it's @LiningAnalysis. Follow me or subscribe to me on YouTube, leave a comment and like the video. Thank you very much. See you next time. Bye.